And what we wanted to talk to you about is pertaining to tax time, okay? So tax time, usually this time for some people, like I said, they rush to file taxes to get that return, right? Keep in mind, if you are getting a tax refund, that means you overpaid in taxes all year long, okay? It basically means you gave the government an interest-free loan on your money, and then they just gave you a portion of it, not even all of it, a portion of it back at the beginning of the following year. Now, I want you to think about that. You struggled all year long, or even if you didn't struggle, you wish you had a little bit more cash flow. You hated to see all of the money that you were losing in taxes every single paycheck when you got paid, right? Right. So wouldn't it make more sense to you to actually get more of that money back throughout the year, reflected on every single paycheck, opposed to getting a lump sum back at the beginning of the year? Okay, I just want you to think about what you can do with that, right? Because every single year, first of the year, we talk about financial freedom, we talk about bettering our credit, we talk about buying a home, we talk about saving. These are all of the things that you guys say every single year, year after year after year. But if you're being robbed every single time you get paid from taxes, how exactly are you going to accomplish those goals? Because I guarantee you, getting a lump sum back at the beginning of the year, you're not going to be able to accomplish all of your goals with just that one lump sum. However, you could be doing it throughout the year gradually.
I love it. And see, it kind of brings me back to a comment that I just recently read. We got a video floating around that's titled very similar to this one. And it says, do not change your W-4 before watching this. And it was a video where we broke down the power of using the W-4 as a tool and applying a strategy to go along with it versus just using the W-4 to get extra money back, which is what many people do. But anyway, one of the comments, somebody said something about, well, you're supposed to pay taxes and yada, 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 XYZ. And I was like, exactly. We pay taxes. We just don't overpay in taxes.
Yes.
See, it's a big difference between the two. We're not saying don't pay taxes. Of course, the taxes benefit us all, some way, shape, form, fashion. You've probably benefited from some tax dollars. I know people had their perspectives on it, but just understand the opportunity that we have to pay taxes. Just don't overpay in taxes. You see, when it comes to the wealthy and the mindset of the people who are wealthy, they choose not to overpay in taxes. And when it comes time to file taxes, that's the best opportunity to scale whether or not you overpaid in taxes. So the things that you did throughout the year could reflect whether or not you're overpaying in taxes,
yes,
or whether you need to pay a little bit more. And I'm gonna say this because a lot of times people get it mixed up when they have to pay in. See, paying in taxes is not a bad thing.
Preach.
Because most of the time, the people that pay in, most of the time, not the people who overpay in taxes, but the people who control their taxes, when they pay in, is because they were able to rightfully utilize the amount of cash flow in the form of taxes that were coming out throughout the year. And now, when they pay in, it's just the amount that they didn't pay throughout the year. But meanwhile, throughout the year, they were able to take the additional cash flow that would have been going to taxes, use that to invest, hopefully reinvest back into their business, get out of debt, and things that can be done with the tax dollars when you understand the strategy. So what this video is all about is just letting you know, look, take this as an opportunity to not overpay in taxes.
Right.
Of course, you have to been doing some groundwork throughout the year of 2018, but don't overpay. Strategically get what's yours and use that extra money, if at all possible, to do great things. Don't just expect a lump sum, because if you get a lump sum, then it's a good chance that you missed out on a lump sum of your wealth, and that ain't what it's about.
Yes, and you guys, we plan on doing a video like this at the beginning of the year every year, but we always forget, right? It always slips our mind to do a video like this. So real fast, what we want to talk about is as a business owner, okay? So we're going to talk directly to the business owners for a second. It is very important that every receipt associated with your business, you keep those receipts and you file those receipts, and you have a good organization as pertains to the receipts, because it can get a little bit overwhelming if you don't do it right or if you wait too late. So I'm sitting here January 7th still logging our 2018 receipts before we file taxes. And let me tell you, I'm super proud of myself because this is a task that I decided that I was going to take over for the both of us and just really get the organization intact, because I'm going to tell you what we did some of our previous years in business. We had all of these receipts, right? And we were saving all of these receipts, right? And then we waited right at the beginning of the year, similar to this time right now, and we're trying to put all of these receipts in, loads of receipts, and it can be so draining. So for one, we have a record keeping software, okay? The software that we use is called the Cash Flow Manager, and that is a software that's offered in our Financial Freedom platform. But for any business owners on the line, if you're interested in a software to keep your receipts organized and clean, to make your record keeping flawless, reach out to us if you're following us organically, or reach out to any of our business partners. They probably shared this video to their page, okay? Reach out to them and ask them about the Cash Flow Manager. So what I did was, Marcus especially, he has it bad putting his receipts in his wallet, and he'll just put them in there and he won't put them in the software, and then they'll build up. So I said, no, we're not going to do that this year. Okay, we're going to do something different. So very first thing I did was I did like this little envelope technique. It's just something that I came up with because I like to write stuff down. I try to be organized. Okay, so I already started for 2019. So I have an envelope right here that says 2019 receipts need to be logged, okay? So this is if we take a business trip, our gas receipts, our food receipts, if we have a receipt for the actual event, if we have, I don't know, name something else, if car repairs or anything associated with business, post office receipts, because we have marketing buttons that we mail off. So any receipts, what I'm going to do, if I don't have time to file them right then and there, I put them in this envelope. And I have Marcus to do the same thing, because sometimes he's out, he's running errands, he's getting receipts as it pertains to business, but he doesn't have time to put them in the software right then and there. So I said, hey, put them in the envelope, okay? Put them in the envelope. And then when I have time, I will go and I will put all of the receipts into the software, okay? So that our record keeping is clean. So then what I do, after I put the receipts in the software, I don't put it back in this envelope because these need to be logged. Well, then I have a receipt. I'll go to this envelope that says our name, logged receipts for 2019, and then it may have our joint. This one has our joint business ventures on it, which is Marriage and Money and my econ. So after I log the receipt, I'll put a small check mark on it, which means I logged it, and then I put it in this bucket. So see, what happens is, you guys, if you're logging all of your receipts, especially as a business owner, you still want to keep the physical copy of the receipts, which is why I labeled these envelopes. And then if you were ever to be audited for whatever reason, you have your receipt that's in your software. So you have your digital images and you have still your physical images. Now, you still want to start logging your receipts as soon as possible, because if you guys know anything about receipts from a business owners on here, they fade. Sometimes you can no longer tell what they are. And that's the problem that we kept having year after year, because we let them pile up. So this year I was much more organized, because I'm really like, if it's too many receipts, I start getting anxiety or something. I don't know. But if I see this envelope starting to bulge out on the side and it's not flat, then maybe after 30 days or after 60 days or after 90 days, I'll just go in here and clean this all out. And then we have multiple business ventures. So I have different envelopes for all of our different business ventures. And then whatever receipt was pertaining to that business, then I put it into that envelope, if that makes sense. So I have one that's just a big bucket of all business ventures. These are the receipts that need to be logged. And then after I actually log them in the software, I put them in the individual envelope for that particular business venture. So I hope that makes sense. So another example I'll give is, some of you guys know that I'm a fashion designer. So I've been mailing off a lot of inventory. I've been designing capes. The end of last year and the beginning of this year, the whole winter season, that's what I'm doing. So I'm literally in the fabric store every other day, it feels like, and I'm buying things, and I'm at the post office every other day, it feels like, and I'm shipping things off. After I log those receipts, I'm going to put it in my particular business venture so that, again, if we were ever to be audited or anything like that, we have all of our receipts, both digitally and physically.
Keyword record keeping. And
Yes.
truth be told, when you think about it as it relates to technology and things of that nature, you'll hear a lot of mixed opinions as it relates to the receipts. Because if you record the receipts and you snap images of the actual receipt, a lot of times that can be accepted as law due to the fact that 9 times out of 10, they're not actually going through the physical receipts. So if you've gotten rid of some previous receipts and you're a business owner, don't feel bad that you don't have them, but it's just a good thing to do, a good practice to have in the event that you have to recover those receipts. But keep in mind, over time, those receipts can fade, get worn out, regardless of where they are. So keep that in mind as well. But if you record them, and if you have a digital way of keeping up with them, and we have a business partner who not only saves them into the cash flow manager, they also export it into an Excel sheet and save it digitally in the event that the software malfunctions for any reason, and now they have it in multiple places. So it's just all about staying covered. And I know it might sound tedious. I know it might sound like, why do you have to go through all of that? Or I don't want to do that if I'm a business owner. If you have the ability to do so, hire it out. Pay your children to do it. Pay them, and now that's an additional tax deduction that you're writing off if you do it correctly because you let them do what it is that you didn't want to do. So keep that in mind first and foremost. But you got to understand that receipts actually equal cash from an angle of tax deductions. And the power in having tax deductions, minimizing your taxes from a business standpoint, is that you get a net return on those tax deductions. And basically what I mean is some things that you write off can be 100% tax deductible. That's just as good as you making a certain amount of money tax-free due to the fact that sometimes if you earn $1, if you earn $100, only $70 of that $100 is actually yours to keep, yours to spend. But if you write off $100 in advertisement and it's 100% tax deductible, then that just lowers your tax liability by a true $100. So when you get the understanding of gross, the net, tax deductions, minimization, then you'll understand the importance of having a business outside of whatever it is that you do if you have a job or other businesses. So you'll understand the importance of it first and foremost, but then you'll value your receipts a little bit different too. You won't just look at it as something you just throw away. A lot of the receipts that I put in my wallet, I put them all in there just in case it's something I don't want to leave anything out unnecessarily. Now I may go through there and be like, okay, this one the tax deduction due to this reason, this one the tax deduction due to this reason, but at least keeping them all and logging the ones that have a higher potential of being tax deductible based on the activities that we were involved in allows me to leave as little money as possible on the table, which brings me back to the comment. The person said something about paying taxes. We believe in paying taxes. We just don't want to overpay in taxes. Exactly. So that was my reply. I said, we just don't overpay in taxes. So people have been coming in liking that reply because they can understand the importance of not overpaying in taxes. And the tax laws justify people overpaying the taxes and all of that, but it all boils down to record keeping those records, tracking it, and allotting it in the necessary spots.
Exactly. And you guys, we will put the link in the comments for the software that we use. I saw somebody ask for that. So yeah, we will put the link. Do you have a Bitly? If you do, I can pin it.
But I don't know about hard. And it is going to be, you can try it out for free for like the first 7 days or something of that nature, and test it out, see if it's something that's good for you. But what I can say is it allows you to log multiple businesses if you have more than one business.
Yes.
Track the numbers. Not only does it help you keep up with the receipts, you take a picture of the receipt, save it. It goes into a folder that you can save into a PDF, Excel. And then in addition to that, you're able to use that same software, especially if you get the pro version, use that same software to set up a financial game plan. So it's loaded. We'll put the link in the bottom.
We'll definitely put the link in the bottom. So the key to this, you guys, is receipts equals cash. And that's why we don't want you to be in a rush to file your taxes, especially as a business owner. Like for us, we have a lot of physical receipts from all of the traveling that we did, hotel stays and gas and all types of stuff. So I had these like a few of these full of receipts that I either already started logging throughout the year last year, and some of them I hadn't quite made it to. So we were keeping all the receipts. But then another thing is we have a lot of digital receipts. So for example, if we booked a hotel stay, but we did it online opposed to paying for it at the hotel, well, that receipt was emailed to us. Same thing with like airfare. Those receipts are emailed to you. They're not mailed to you, right? So we have to go in and also pull all of our digital receipts. We believe heavily in investing in ourselves as well. So there's a lot of digital products that we purchase from people that's more knowledgeable than us. There's softwares that we purchase for online marketing. So there's a lot of digital receipts. We take the time to go back through our email, pull all of those receipts as well, and put those into the cash flow manager system. Now, somebody's probably wondering, how do I know what I can file on my taxes and what I can't? Now, as you're collecting these receipts, you know for a fact, business and personal, okay? So if you know it's personal, for example, going to go buy your child diapers, that's not business, that's personal. So that Walmart receipt can go, okay? But if you are, let's say, meeting up with somebody at Starbucks and it's a business meeting, you're specifically going to Starbucks to meet with them about business. Like we teach financial education, and so we sell a financial education membership. So it's not rare that we would go and sit down with somebody and say, okay, what are your goals? Let me show you what I have. Let me show you how we can help you. And then, of course, attempt to make a sale on our membership, because that's what we do, okay? So some people might say, well, it's Starbucks. Can I really write that off on my taxes? And we can understand you being a little hesitant about that. My suggestion is keep that receipt, file that receipt, and then, of course, we're not tax preparers. We're not going to tell you what you can and can't do. But what you want to do is go to irs.gov. Go to irs.gov, and they have a whole book, it feels like, a whole list of things that you can and cannot write off on your taxes as a business owner. Don't just listen to Mr. and Mrs. Smith. Go to irs.gov, pull those publications. It's a ton of them, over 300 things that you can write off on your taxes as a business owner. Make sure you are not leaving money on the table. Now, somebody just asked about bank statements. What about your bank statements? Do you want to address that?
Sure. As it relates to the bank statements, this is the thing you got to understand. Sometimes bank statements can be accepted, but more so if the bank statement itself says exactly what that expense went to. So if they knew that the expense went to Priceline as it relates to airfare, and it said airfare, then you may be able to document that in conjunction with the date of the event, a business event that you may have flown out to. However, if it's a Walmart receipt, then that's too vague, because Walmart can consist of plenty of things. Yeah, you could have bought some mailing materials, some paper, some ink, things of that nature, but you also could have bought some groceries or some beverages.
Yep.
And if you just take a picture of that Walmart receipt and claim it as business, then it's too vague to really be justified, and it can easily be denied. So make sure the bank statement says exactly what it is versus something vague to where it could be anything. So the more detailed and specific you can be, the better. And this is what you got to understand, because like she said, certain people are already filing taxes right now, or have already started saying that, they were ready to go. Now, unless they were fully organized and they were already done with everything they needed to do, and they understand that this in their first rodeo as it relates to business deductions, then it's a good chance that they're leaving money on the table. If you see somebody who files taxes early, super early, either they're super duper organized and they already know what to expect, and they have a good tax preparer or accountant or whoever they're dealing with that knows exactly what needs to be done, or they're leaving money on the table. So we're specifically talking to people who are leaving money on the table, because many people do, just by not want to take out the additional time to make sure you've recorded things that justify as business deductions. This could be thousands of dollars that you leave on the table. And if you want to leave that much money on the table, let me know where the table is and I'll come through.
Hello, come through. Alicia, as it pertains to business, bank statements, I just say don't do it. I mean, it's so much work. It's so much work. Like Marcus was saying, and it's not detailed enough. So I say no. Keep as many receipts as you possibly can. It's just hard. And if you were to be audited, like he said, they want specifics. So if you have that physical receipts, they want to know who you spent the money with, what made it business, where, city, state, location, online, where. And then, they just really wants to know what makes this business. And you can't get all of that from a bank statement. So I say, girl, save yourself the headache. So.
But this came directly from somebody who's been in the game 15 years. They said sometimes it's worth using a bank statement if you absolutely have nothing else, but it must be specific.
Right.
So if you in that situation where you just have to use it, keep it at a minimum. But make sure it's specific. Otherwise, it ain't worth it.
Use my envelope method, okay? Everybody might not like this, but it's a lifesaver for me. What do you think about my envelope method? Be honest, live.
I like the envelope. I like the envelope. Anything that, because I don't like doing it, but I know it's beneficial. So I keep the receipts and go through the headache if I get behind or whatever the case may be. So the envelopes are helpful. We just stash them in the envelope or log them, one of the two, and until it's all done. But the thing we don't want to do is leave money on the table. We don't mind if we have to owe, like we had to pay into the state, last year and, I think the year before. We don't mind doing that. We just don't want to overpay.
Exactly.
And we want to get what's rightfully ours because we do conduct business in the intent to make profits and keep growing that profit.
Exactly. So guys, that's all I wanted to share. I think I covered everything. Organization tip, envelope method. You may have something else. This works wonders for me. Even mileage. A lot of you guys, this is the last thing I'm gonna say. And y'all might not like my method. I know everything is going digital, but I'm that person. Like, I'm somebody that likes to write everything down and look at stuff, and then I'll go to the digital stuff. I don't know. I'm just like that. Like, I still write stuff down and, stuff like that. So also mileage as a business owner, you guys, if you are driving different places as it pertains to business, going to events, meeting up with clients, customers, things of that nature, going to the post office, all of those miles can be tracked if you're going out of town. And so what I also decided to do, a little paper version. So we have a little paper version in the car where I just beginning odometer, ending odometer, how many of those miles were business, and then I'm going to go back and put that in the digital thing. But sometimes it's just more convenient for me. I'm mostly on the passenger side because Marcus is always driving everywhere we go. So when we get in the car, I grab the paper. I keep it just kind of in a little visor. Grab the paper real fast. I made a little chart, and I say, hey, what's the odometer? Write it down. When we get to where we're going and get back home, I write down the ending odometer, and it's just convenient for me. So do what works for you, y'all, but get organized, okay? That's all we came here to say. Get organized. And don't be in a rush to file taxes. It ain't that serious.
Don't be on a rush. Otherwise, you more than likely leave money on the table. And like I said, if you're willing to leave thousands of dollars on the table, even hundreds of dollars on the table, you let me know where the table is. Because I'll show up and I'll collect it for you. And bring it to our table. That's all we got.
There we go. Share this video, you guys, or tag anybody that you know that's in business, because it's very, very, very important before you file taxes that you know what you're doing and you're at least trying to maximize your during this tax time, okay? Whether that's lowering the amount that you owe or whether that's increasing the amount that you get back as a business owner is very, very important, all right? So that's all we got. Mr. and Mrs. Smith signing out.